Bugs Bunny, mate.
I'll mute as I eat.
Okay. YouTube. Let me get rid of that. And we should have a chart. We should be now live on YouTube. And I will say, Ash, please don't turn your mic off. You give me a heart attack. Very
Still here, mate. Still here.
Excellent. This is a marvelous technological breakthrough, I've got to say, that I've had today. I didn't know I could actually pull my computer to pieces so readily and get it back in one piece for the show. So I'm very happy, chappy, that I can say very, very good afternoon, evening, morning, wherever you may be in God's green garden on this Thursday, the 5th of the 3rd in most places. Okay, Angus has just tuned in as well. You can hear him in the background, and it's amazing how his timing sort of kicks in here as well. I'll go and shut the door when Ash starts to talk, so we can't hear any more of Ash.
I'm here, mate. I'm here.
Oh, Angus.
I'm here. To be honest, I was just having a listen to Angus's opinion and just making sure that I was in concert with him. Yeah, he knows what he's talking about. That Angus.
The Angus seal of approval. Good. Was that long or short? I didn't quite get it. I was trying to.
And therein lies the problem. That's why we keep getting it wrong.
Hello, Lewis. How you doing, buddy? So I think, have you got anything pressing, mate?
Not really, no. I mean, it's the market has popped up, as we know. I'm kind of looking for a bit of a sideways day, to be honest, anyway. And I'll tell you the reasons why in a moment. But no, I mean, you can go ahead with the pound trade if that's what you were looking to get on. That's cool
why
by
not?
me.
Let's do that. We'll go to this chart and do that.
Incidentally, we've had our first company go to the wall due to the coronavirus.
Oh, is that right? Who was that?
A company called Flybe that is actually part of Virgin Atlantic. They have gone into administration, and due to the coronavirus, so the travel industry has been hardest hit, as we know, and now the evidence is being manifest.
Yeah, wow. Okay, how long can it last is the big question everyone's going to be asking themselves, of course, and positioning themselves based on the answers to that question, which is at this point in time completely undeterminable. How would you know?
Yes. We'll get into it a little bit more in a bit. But good morning, Lewis. I don't think Flybe will move the market. Well, they definitely won't move the market. But
yeah, I guess it's probably not them per se, but what it probably means is this the first domino to fall, maybe.
Exactly. Exactly.
Anyway, as you say, we'll have a chat about that. First up, we've got a pound situation here, and the situation is that the market's got no idea what to do right now. I guess that's pretty common across the board right now as well. But we do have a breakout trade that we're trying to perfect, and we're going to place the trade above the high of the range of the last three candles. That's this one, this one, and this one. And we're going to place an order below the low of that range, which is below this low here. We best do that because they are very small candles. I'm going to hate where this entry is short, I can tell you, but let's go there. Righto, let's pick the short first, shall we? We'll go short at 10 underneath this bar, which will be 128.56. I'm just using default volumes here, guys, because this is in complete beta mode. As I've said all the time, that's a bit of a disclaimer. The trades are not settled as part of a strategy as yet, so do not place any undue risk on the table at this point. 128.56 is what I said. And the stop loss will be 15 above the high of the range, which is above the high of that bar. 128.89 becomes 128.94. Sorry, 129.04. I'll get that right. 129.04. 21.04 is the stop loss on, oh, I've got that as a buy stop. Should be a sell stop. There we go. That one's good to go. There's the stop loss. You can't see the entry yet, but we'll put the entry as the stop loss for the short, for the long rather. And here we go. The entry price will be on the buy stop, 129.04. Loser yesterday, this one, mate. Not the full amount because we did trail our candles, but was a loser.
What direction were we in yesterday?
We were short. We were short.
Oh, yeah.
About here. Actually, which candle was? I can't remember which candle it was, but we didn't get 2 bars that we could have trailed our stops. These were the 2 bars where we trailed our stops here, and saved us a bit of money, but not ideal. Now I've 28.76, I think it was, for our stop on the long. Oh, that doesn't work. Can't be right. 28.66. Okay, let me amend that. $28.66. That doesn't look right either. Good Lord, what's going on here, Ash? 10 underneath that bar. Show me, do. Righto, 128.56. Okay, let's get this right. Is that what I said in the first one? I don't think it is. Okay, let me check the short. Sell stop 128.56. It's cool. All right, so there we go. The entry level for the long is 129.04. It's also the stop loss for the short. Stop loss for the long is at 128.56, which is also the entry for the short in the worst possible position it could be. I'm not adding any filters to this, guys, but if I were, I would definitely not have my entry bang on the weekly pivot. I can promise you that. That doesn't say it can't happen, of course, but very, very low probability trade and high risk if you're going short here. So bear that in mind as well. All right, mates, that is the pound breakout trade for the day, and
Brilliant.
We'll see how that goes and how it tracks, if it indeed does trigger in the next, 40 minutes or so whilst we're on the air. What's
Okay, mate.
With the FTSE and everything else around the world, mate?
Let's talk FTSE, shall we? If you could stop sharing just for a few minutes, let's have a look at the FTSE. Let's talk FTSE because I'll just say, morning LT. We've just had our first announcement of the first company to go into administration. You can see you don't really need to see too much more than a stack load of pivots, right on top of each other to know on a technical basis. All this should do is bang its head and jump around and bash its head and jump around in this area. The only thing is, I mean, the coronavirus does sort of change the parameters and change the terrain just a little bit, and I am bearish the FTSE now. I've been looking at the longs just so I could get into the shorts. Now it's not quite ready to go short, and we probably need to see it under the daily pivot at least before we do look for the shorts. There is this trend line here that may hold up, but let's have a think about what's going on. So we've had the central banks. Obviously, we've had the United States lowering interest rates to half a percent, and overnight we also had, not overnight, actually yesterday we had the Bank of Canada doing the same. The IMF have released a statement saying that there is coordination between central banks, the Bank of Japan, the Bank of England, and China has stimulus measures as well put in place. I suppose my question is not will what they are doing work, My question is, how long will it take to filter through? And I don't think it can filter through fast enough to stop another decline. So that's why I'm looking for the shorts. I don't think there's always speculation on these things, and it was interesting actually, because this was the speculation that the Fed were going to loosen the interest rates, and that was the reaction. In fact, this was the final bar when they I think that was the bar there when they actually released the point that they were going to. It was half an hour after the US market opened. They told the market that they would be easing back on interest rates, and the market actually, I mean, did it bomb? Relatively speaking, considering the moves we've had recently, it doesn't look like it has bombed, but that was a 180 pip move from low to high. So in fact, from the very, very highest point, it was a 260 pip move, which is huge on the FTSE, of course, but doesn't look that big when we kind of consider what's been going on prior to that. But that was the initial move. But then since then, we've been grinding back to the upside. And, all of a sudden, as the market decided, actually, we do quite like this rate cut. It seems a little bit schizophrenic, which that's the nature of the beast right now. The beast is effectively saying, we don't know what's going on, and we will just trade on anything that's available. Now, in this particular area, I think there is a potential sell signal. Now, it might not be today, and I will qualify that by showing you this bar. Well, in fact, there's two ways we can qualify it technically. The first thing is these pivots. It's got to break out from one of these pivots. It's got to end up with a pivot above price in a downtrend and below price, obviously, in an uptrend. Now, we do have two below price here, but does it mean that maybe we just bash around today, go nowhere, then tomorrow we find the daily pivot just nestled above price, and that's the trigger to go down on a technical basis? Or do we actually come down to this point at some point today, and then flip back to the upside again, and then able to take a trade around about the weekly or daily pivot anyway? That's a possibility, and I'll look for either effectively. But this is a chart of the daily price action on the FTSE. Gap down this morning. Looks like an inside bar. There was a gap up the day before. Gap up yesterday took us higher. Does this gap down take us lower? Not sure. But does it maybe pause us? It may well. That might well be an opportunity there. Now, there's a couple of ways you could play it. Even if you got in here, actually, your stops would be in a pretty good place. 60 pips in this kind of movement of price action isn't bad. It's not a bad place to try and get in. The issue is when we look on the shorter term timeframes, apart from the 5, maybe you haven't really got a case for the downside at this stage. 4 hour is moving to the upside, but right on resistance. There is a resistance point here. But no double top or there's no reversal pattern going on just yet. Hourly, maybe a little bit more evidence that we might have broken to the downside to a degree, but it's kind of flat along here. But it looks like it may well have broken down this trend line, which looks like it may be part of a channel. Could be stretching it a bit to say that's part of a channel, but I'd say that this lower trend line is in existence, and we are below that trend line, but we're not making lows. So we haven't made a fresh low down here. So that also skews the technical picture somewhat as well. So there's not really anything tradable there. There's not anything tradable on the 4 hour. Now we go down to the 15, and the 15 again doesn't really give us a clear enough picture. This gap has now been closed, so it is really good to go to the downside on this particular run. But again, it hasn't taken out this low here. And I suspect we probably need to take out this low. And that low at 67.93, it looks like, so maybe 67.92, coincides pretty well with the daily pivot. So it looks like we should get through this area on price and on pivots, mate. So there's not really a lot we can do. And I wonder whether we're going to get too much in the way of news and data today. And let's have a quick look at the news releases that we know that are available. We can just take a quick check on Forex Factory. Now, I have to say, Forex Factory, somebody's asking about, double top. I will get to that in a moment, mate. When rates cut, usually the dollar will go down while stocks like the NASDAQ, FTSE, WTI gold, and yes, they do. Yes, on the whole, that's exactly what will happen. If we think back to the 2009 crisis, now I don't really want to, the scaremongering thing is not really my game. I don't want to kind of start necessarily comparing what's going on now to 2009, because every single thing that happens similar to this in the market is different. But this has got a hint of that about it, and it took QE2 before. And if you don't know what QE is, then ask about that too, and we'll go into that a little bit. But it took QE2 before the market was able to pick itself off the floor. So the interest rates were being cut, QE was put into place, and the market still came down. So it depends on the environment. If it was as simple as Fed cut rates, market goes up, dollar goes down, then we'd all be pretty wealthy very, very fast and in the most simple way possible. But it's not quite as elementary as that. It's got a little bit more to it than that. And when it comes down to the instrument that they will use, then lowering interest rates is one of the fiscal instruments and fiscal tools that they will have in their tool bag and they will use. But it doesn't mean it works, because if it did, they would be lowering and putting them up every month. Every time the market came down a bit, they'd lower them. Every time it went up, they'd put them up a bit. It's not quite as straightforward as that. So the question comes down to, will it work this time? And we will only know the answer when we see the earnings and the reports and the data. We'll only know the answer from that. That's the only way we can know the answer for sure. We can speculate, but actually, we are speculators. That's what we are as traders. We are speculating on market movement. But when it comes down to whether that speculation is real, and whether it will drive the market, is another quandary. Because actually, some of the movement to the upside in the market that's been going on has been a bit confounding anyway. So we are just getting this this correction. So when it comes down to the technicals, is this just a correction, or is it the start of a recession? And we'll only know that from the instruments that the federal bank and some of the other central banks on the planet will use. Really, the central bank, the ECB, and the Bank of China are the ones that we're most interested in. Bank of England to a degree, because of Brexit. It's sort of, it is a kind of story that's front and center. And now we are leaving the EU. I suppose the Bank of England plays a bit more of a important role in what's going to shape the FTSE 100. But it's really about the other three, the European banks and the United States and China. But will it work? I don't know, and that's the thing. If it was a zero-sum game like that, as I say, we'd all be going long the FTSE and long the Dow and the S&P right now and be dandy. But as I said off air, as I said just when we came online, we've had our first company go to the wall in the United Kingdom. Granted, that was before QE. The writing was probably on the wall, but we have to remember that it takes a little while for not QE, sorry, for the interest rate cut. It takes a little while for the liquidity to get into the system. It's like it is an injection, but it's a very slow-moving injection, comparatively speaking. So those companies that were already struggling will probably buckle. We haven't seen a big gun yet, and that's the difference. When we had the 2009 crash, it was Lehman Brothers, wasn't it, Jeff?
Yes, it was.
The Lehman Brothers were the big ones. There was probably others before, little companies before, and that's always a bit of a barometer. And from I was trading at that time, but my knowledge wasn't quite as in depth, so I didn't really understand the need to look so far into some of the messages that the market was telling me. But when it comes down to the Lehman Brothers was the first big gun to go. So we are waiting for a big gun to not necessarily go, but certainly be struggling before we can kind of say for sure that this market is coming down hard, and that may not happen. Or we are waiting for recession, and recession is 2 contracted quarters of GDP. Actually, is it quarters or it's months,
looking
isn't it?
very susceptible to that in the next couple of months too, mate. I've got to say.
Australia. Yeah, I wanted to talk to you about the Australian economy yesterday, but we didn't get the chance. So maybe we'll come to that as well later.
We will, I think. But back to Chris's observation, and exactly what you've said is 100% true. But I think we are in different times. This is not normal. There's no question about that. But the world markets were on fire, absolute fire, and new highs, all-time new highs, etc., etc., until the last, if I put, or Ash, if you got the S&P, something like that, to put up, you'll see.
You on a daily?
Yeah, that'll do. You'll see that the market really has reacted to the dollar cut, but it may not be as obvious as we suspect. But if you look at dollar yen, or sorry, let's go with the markets first. If you look at Friday, Monday, and Wednesday's bars, and don't forget that over the weekend there was speculation, even probably as early as Friday, there was speculation that the Fed would step in hard. You know, that commentary,
Friday, Monday, Tuesday, Wednesday,
that commentary was about the place, right? And if you see those 3 bars, that coincides exactly with what we were talking about. The rate cut was yesterday, right? Or overnight the day before. So you are actually seeing rallies in the S&P. The weight of, I guess, let's call it gravity, coronavirus and gravity, because we're coming off extreme highs, don't forget, right? And that's why the market corrected. Coronavirus probably was the trigger, but it was due to happen. And those 3 green bars that you see there, I think, are a direct result of the Fed stepping in. So, and to your point, Ash, is it going to make a difference? I doubt it. I really doubt it. Short term, and don't forget, we're in a completely different scenario here. If this is driven by the coronavirus, I won't call it a crash, I'll call it a correction. If that's driven and certainly triggered, I would believe, by the coronavirus, this is not a worldwide liquidity. It's there's no question that there may be a liquidity issue, but it's not 2008, 2009.
Do you know that? And that's you're so on the money there, mate. And you know, I keep churning this aspect over in my head. It doesn't matter how much money a central bank throws at the market, it will not stop people from going to work. It will not start people, going back to work. And if we think about what runs an economy, it is the production of goods and then the sale of goods. And if they can't produce goods because people aren't going to work, and I'll give you a few examples of that. Obviously, we have the production line in China, and I know everybody's going to start saying, yeah, but you know the factories in China that you know, the Apple factory in China is back to 60% employment again. That, you know, back to work. That's great. But what about in Italy? You know, they're cancelling sporting events in Italy. There is
and that's not the only place.
That's not the only place. The Olympic Games is due in Japan. They're closing schools in Italy. If they close schools, teachers don't go to work. If they close schools, kids stay at home. What's going to happen to the parents? So, you know, when I think about this, it has surprised me that the market has been so resilient to this point, you know, and managed to shoot itself up, because the Fed cannot, in my opinion, and like you, mate, I'm the same as you. The Fed, in my opinion, cannot fix this with money.
No, I agree.
You know, it's like it's like a silent assassin in a way, isn't it? It's like you know, they're going to need Columbo on board if they really want to kind of find this kit, you know, the thing that's going to squeeze the market and then the answer to stopping it. But I suspect it's probably more about a vaccine than anything else, or something like that. I don't know. Or it just kind of it runs itself out. You know, it just it blows itself out on its own. I don't know. I don't know what the answer is.
We can't answer. There is no answer. That's the quandary that we've all got at the moment. And I guess until there's no answer, you've pretty much got to be a bear, those markets, I would have thought.
You do, mate. So this would be a question for you then. If the market, as you say, this is the S&P. In fact, it's a question for everybody, and you know, answers on a postcard in YouTube. Let's have a think about this. If the market's reaction to a Fed rate cut was this, and ultimately this, let's forget this bar because I know the rate cut was announced then, but ultimately that was the reaction. What is going to now drive this? What's going to be the trigger to stop this move going higher? Or is there, or do we not need a trigger? I mean, I don't know. What do you think about that, mate? If,
well,
you know,
the trigger's been pulled, yes. In my opinion, the trigger was pulled by the coronavirus. Now, essentially the coronavirus at this point in time, in my opinion, and this is only my opinion, hasn't got the wherewithal. It's certainly got the potential, but it hasn't got the substance right now to make this market correct 20-25%, in my humble opinion. But it's certainly got the potential to do that. And so therefore the trigger has already been pulled. And you just said it yourself, the solution is the remedy, right? So it's one and the same thing. So nothing has changed in that regard, in my humble opinion, just yet. So the potential is still there, and the more we hear of deaths and outbreaks in different parts of the world, the more that potential will drive the market short. But I go back to my first point, and my first point was we're at all-time highs in the first place. And as soon as the negative comes in and the fear starts to set in, that's what drives it. So
yeah,
the trigger's been pulled, but once, you know, it becomes contagion at the end of the day.
And you know, this is another really good point you make, because when we think about this, that took 95, 96, 97, let's call it 100 trading days to get from 2,800 to 2,900, let's call it 2,900 up to 3,400, just to make the maths easy.
Yep.
It took 97 days on the way up. It took 6 on the way down.
It's the same old story, isn't it? Up by the staircase, down by the elevator.
Yeah. I mean, I think this is more like it jumped out off the top of the building.
It is.
You know, it didn't even bother with the elevator, because even that would be too gentle for a move like this. I mean, it has just been it's been crazy. But in some respects, what's interesting is that all we've really done is come back to October's level. You know, we haven't. This isn't at this point. It hasn't actually caused a huge technical disaster. It's just a possibility that this, you know, and my opinion is this is going further. I think we go lower from here. I think we go lower from this bottom point here.
Yeah.
Now, while I'm on that, we can deal with a double top question. So a double top is the opposite to a double bottom, and what they are price signals that suggest that the area that price previously arrived at will hold. So I'll show you visually what I mean by that. If we were to get a double bottom in this market, and a double bottom would be a bullish, if you like, signal. The double bottom would occur if price came back down to the same low to the same bottom of the range and then popped up again. That would give us two bottoms of the same area, and it would provide a double bottom. And the same is true if you had a double top, and I'll show you a double top on visually instead from the FTSE on a monthly chart. So the double top on the FTSE would be, let's do it on a weekly instead, actually, look much cleaner. Would be this. Where's my... Oh, let me try it. It should be this. Price comes up and is rejected. Then it comes up, same level, and is rejected. Now, obviously, none of these are really clean, but it's pretty much that. It's pretty much come up to an area, come back down again to an area, come up, and then come back down again. And this is called an M topping pattern because it looks like an M. You know, there's our bases. And what would normally happen with an M topping pattern is that you would find where the top of the M and the bottom of the M, and your measured move would be your anticipated range that the market would get to before bouncing back.
Bang on, doesn't it?
Yes, it does. And if we yes, it does actually. Let's have a look. I don't know. I've not actually done this with the FTSE, but let's have a look what that means. There's our measuring tool here. And when it breaks down, look at that, to the penny pretty much. That's where the market bounced back from. So that's how you can use the double top as well as trying to look for an entry here. If you anticipated a weaker market, let's say you ended up seeing this bar here. This bar here, this red bar here. Let's say you saw that red bar, and because of this high, and because of what happened down here for a kind of neckline, you're anticipating that you could get a double top in this area. So when the market comes up and then gives you this bar, that's the point that you start thinking, maybe it's time to sell. Or maybe you let this sell, and as this one comes back up again, you look to enter along this bar because you know that if you were to do a measured move on the double top, then it's going to give you something like this. So you've got that much room to kind of like put your stop with that much room to the downside, which looks like around about a 4-to-1 on a weekly chart. So that's how you can use it technically and use the technical analysis, analytical tool with it. Now that just tells us where it could bounce. That doesn't tell us it's going to hold there. It just tells us that that's a range that we should aim for with our trade if we were to enter at that point. Now, when it comes down, we'll find another pattern in here somewhere. I tell you what, the pattern I'm interested in now with the FTSE, and I have been for a while, and I've been talking about this pattern for ages, and it might actually now end up playing out. I don't know, but this is the pattern that may go on now, which is a little bit grim, and it's on a monthly chart. So there's certainly no guarantee by any stretch that firstly it's going to work out, and secondly that it might end up just being a little bit ambitious. So that's the pattern that I've been looking at, and it's called a diamond formation. Now, the problem with a diamond formation, you don't find these on the lows, by the way. This is a topping pattern. The problem with a diamond formation is that it does do the same thing where you're trying to find a point where it's the level's gonna meet the base, if you like, or it might be there, but it's somewhere within this range. Let's be conservative. You're basically picking the top to the next level down. Now, the diamond pattern puts us down into this area. So if we do manage to build in some shorts, now this is a monthly chart, so we've got plenty of time. But if we do manage to build in some shorts, when we look down here, it looks pretty good. You know, it might be a little bit more shallow. And if you were using this as a measuring tool, because I haven't drawn that particularly clean, you know, if we spent some time on this, then we might find that the diamond is in a slightly different place. You know, maybe it's there instead. I'm not sure. We'd have to have a look. But it's going to be. But it does suggest anyway that we are likely to see this area down here at 59,900, 59.90. Let's call it 50. Let's call it 6,000. So it's suggesting 6,000. Now, if we get to 6,000, you heard it here first, and we're currently at 67.60. Started the day at near 6,900. Sorry, 6,800. So it's an 800-point drop from where we are now, and that's another what 13% drop down, maybe 10%, let's call it, before we find a base. Now that again doesn't mean that we find a base and go higher. It just means that it's suggesting that it'd be this area that we next bounce from. So I'm really interested in the shorts, and if truth be told, I've got a few in the market already, but I think there's still more opportunities to add, which I'll be doing. So we do now have a sell signal on the FTSE. There was something else I was going to mention on this, mate.
Did you finish the double tops situation?
Oh, I think so. Let's ask Chris. No, this may well still bounce and come back again. So you're still looking for the same thing. You're still looking for an entry in this area. There are now sell signals on the FTSE confirmed. So we can now trade this to the downside. On short-term time frames, to be fair, we only have confirmation. But if this hourly chart also ends up under this price point, that is confirmation that you should be looking for downside, and then it's just about getting the entry right. Did we deal with a double top, Chris, for you? Lewis is saying someone somewhere comes out with a vaccine. How will the market react? That's a great question, mate. Does it put people back to work? Would be my answer to that. If it puts people back to work, then yeah, you know. But again, you know, how long does that take? How long does it take before people go back to work, and how long does it take before production is back up again?
Yeah, there'll be an immediate reaction that they'll go, oh yes, here we go.
Hooray, yeah.
But then exactly what you're saying, Ash, will become reality, and the market will go, well, hang on a minute, we're a long way from solved.
Yeah, exactly. And the thing is, I would take the long if I was in one of those areas that I just pointed out. You know, if they said, oh, there's a vaccine, I'd take a long there just because you got a nice cheap price, and it's probably likely to react there. But it'll probably come back again, you know, before it really starts to motor to the upside. But it's worth a punt. You know, if the market's in a decent area, I wouldn't just take a long because they've discovered a vaccine. I still think you need to see how that filters through into the marketplace. Okay, mate. Yeah. So yes, that answers Chris's question. No, there's no such thing as an hourly pivot, Chris. To my knowledge, you only get daily, weekly, monthly, and I do it like the Union Jack. So I've got my daily as a blue. So I'm basically red, white, and blue. I'm a pommy, so so I'm going red monthly, white weekly, blue daily. Red, white, blue. So it's daily, weekly, monthly.
I wonder there'd be his historic answer to this question, and it's probably got a lot to do with the war when the redcoats turned up. Gee, I'm going back a fair way. I wasn't there, mind you.
I was going to ask.
The red, white, and blue. Well, the Yankees claimed that, didn't they? Well, not the Yankees, but the Americans claimed that. The red, white, and blue. That's their kind of moniker. But at the end of the day, it was the Brits who had it.
What the three colours?
Yeah.
Yeah, I guess they did actually. Yeah, they did, I suppose.
Just
What the
just
the
because.
yeah.
I'm going to place a
Red,
trade,
white.
mate.
Great, great. And I will get to. Do you know what? I just remembered we haven't answered the question from last week as well. So we'll get to that as well.
Okay. I will attempt to take screen.
I will attempt to give it to you.
Heck, I've lost my control panel. Where's it gone?
You need some help?
You know, I always need help, Ash. I can't find the control. Oh, there it is. There it is. I was on minimal screen. That's why.
Oh yeah,
Right.
yeah, I do that sometimes.
Dollar yen, guys. Dollar yen. We're looking at, and this is, I'd call a medium risk to high risk trade, but I like the scenario. I like the fact that we've got a little, I'll call it a double bottom. It's only 30-minute chart, so it's not really a significant double bottom, but there's a higher low, there's higher highs and higher lows that we got in place. And this one here, to me, is a significant higher low. And instead of trading that bar there, which I would think is reasonable, except for the fact that we'll be trading straight into the daily pivot, I'm going to trade this one here. So I'm going to put my entry above that bar. And I'll just get the level for that. It'll be 107.39. So new order 107.39. It's a buy stop. And the stop loss will be, I'm going to sneak it underneath that bar there at 107.17. Now, the reason it is risky is because it's not that bad, because we're not trading into the high of the day. And that's something that I just don't do. This is the high of the day up here. So we're quite okay there, but we are trading into the last little swing, if you like. So that makes it a little bit risky. And of course, we're trading into a broken trend line. That's not so bad because we've been back there once. So I think if we come back there again, we'll actually get through it. The obvious take profit level for mine will be in this vicinity. Yeah, I think we'll use that level there. So let's go with 107.54 will be the first take profit level, which is bang on there. And then we can probably let it have a bit of breathing space. Let's go a little bit wider to determine that second one. Yeah, I think that's pretty clear as well. We'll go to there, I think. There's a big confluence here as well. So let's call that 108.26. So there's about 70, nearly 80 pips in this. In fact, 90 pips. Where's the entry? Can't remember now. Yeah, there's nearly 100 odd pips in this, nearly. So that's why it's worth the risk. If we get into this, we're only risking about 22 pips. So it could be a good 4-to-1 trade if it comes off. But we definitely need to take profit here and get ourselves safe in the market. There we go, dollar yen long, and we are looking for 107.39 as our entry. I think I said.
Nice.
Pound. I don't think that's been triggered yet. No, but very close to it. when I said before, I
Oh.
hate the entry on the short. I also hate the entry on the long, untested monthly pivot. Oh, what a shocking place to be trading breakouts here.
My goodness me, yeah.
Mind you, if it does break, it'll break fairly hard. But yeah, terrible.
Jeez, yeah, you're right in amongst it there, mate.
What a shocker. And again, guys, this is completely in beta mode, and we've got no filters on it at all. It's simply trading the breakout. So if there were filters on this, I wouldn't be placing my order there. As I said, be up here somewhere, and the short would probably be down here somewhere. In other words, I probably wouldn't even take the trade because it's just too much of a spread for me. Should I have a quick squeeze around the place, mate?
Yes, let's have a quick squid around the place, and then we'll get to some the question of last week. It was about the account size, wasn't it, or margin or something?
Okay. Yep.
You remember?
No.
I tell you what,
it was about margin. Yes.
I posted it to you as well, just so we both had it. And when was it? Was it on Friday?
I've had a hell of a week, as you know. I haven't even been.
Oh yes, mate. Yeah. Here we go. Hi Ash, for the 1.5k out of 3k that is tradable, can I just look at the margin in MetaTrader, because I'm not sure how to measure the amount that is traded in the market that is floating.
Okay.
I can't remember who it was from, but that's the question.
Probably Chris, I think.
It might be Chris. Okay, yeah, all right. Well, let me have a look.
All right, euro dollar. We'll have a look at euro dollar. I'm still in this trade from, I don't even remember where we got into this, but it was down here somewhere. This has been a pretty damn good trade. Really happy with it. And it's still hanging in there. I've moved my stops right up to here, and I expected to get taken out of this yesterday. Didn't happen because primarily of what the Fed did, I guess, and kept this one afloat. It could actually break through here now with that Fed announcement, but it is right at the top of where I expected it to be. You can see here, speaking of double tops, there's one there, and this is now gone into a very, very clear consolidation pattern. That's good news for me, because what I'll be looking to do is trade this off the bottom if it gets to here, to the top, and off the top to the bottom if it gets to there. So whichever one it gets to first, that's the direction I will seek to trade it. If we get taken out here, we've still got options when it comes back to trade it short if we want to do that. But at the moment, I'm waiting for this to hit the bottom or the top of that range before I trade it again. Dollar yen we now know about. I've just spoken about that. My analysis on dollar yen would be similar, I suppose, to what I've just said on the euro, in that we've got a strong support level here, but I wouldn't want to be trading this seriously long. I'm not a bull by any stretch, and what we just spoke about with the coronavirus and the market's reaction to that, the market's reaction to the Fed, all of those things taken into consideration, you've got to be a bear here, I believe. But that doesn't stop me intraday looking for counter trend trades to significant levels. And I think, that those levels are pretty obvious. It's here and here. And if we get to there, then happy days. If we get just to the first level, then we've still got money in the bank, and we will turn that into a no risk trade as soon as we hit that level. So on that basis, I'm happy to take the trade. Nothing more on that at this point. The pound, as I said, this level here is very, very interesting and is going to shape my bias on the pound, this area right here, right now. Why? Because we do have a confluence here of, and I know this has been broken, but if I look at this on a bigger picture, not that big, but that big, this is an interesting trend line that comes down here. Was broken. We bounced off it again. We've bounced off it again, and we're here. So it's respecting this channel. It's respecting this channel very, very well. And what better place to look for a short than confluence area of top of channel and monthly pivot? So I'm concentrating there on looking for a short on pound US dollar. The thing that would convince me otherwise would be if the monthly pivot actually broke. Let's go back to the 4-hour chart for this. if the monthly pivot actually broke, and then we got a retest of both the monthly pivot and the trend line, or it is a trend line, I suppose, but it's the top of the channel. That would lead me to believe that this sequence is now broken, and we could look for a potential long, but only to maybe this area here. So there's not much in it, I don't think, if it does go long, is what I'm saying. Aussie, I know there's a question there from Lewis. Will I take a trade on Aussie US dollar, which is now in the top of the descending channel? Coincidentally, Lewis, let's have a look at that whilst we are there. And the descending channel you're looking at is this very sharp one, or is it this very wide one? Is it the inner one or the outer one, Lewis, that we're looking at? I'll have a look at the inner one first. Shall we go from there? Somewhere through there. That's probably the one you're looking at, Lewis, I would imagine. Yeah, okay. So yes, absolutely. And I'm preying on it, P-R-E-Y-I-N-G, because I feel that this will give us an opportunity to trade this short. And I'm looking at just about any time frame. There'll be trade lines coming through here as well. So back underneath here, in particular where the confluence exists with the daily pivot, if I look to retest that once we get back inside, I reckon that would be a hell of an opportunity to trade it back down to the 64s, you know, into the mid 64s, around about that level there. In the first instance, yeah, 64.5, something like that. So I think there's a big opportunity there for us if that does pan out. If it keeps going long, then so be it. We shouldn't be enticed into something that won't work. But at this point in time, I'm really sweating on this to come back under here and then retest it and yes, get short. So answer short is yes, Lewis, that's exactly what I'm looking for. And there's really nothing that excites me here in terms of tradable opportunities with the smaller timeframes at this point. Oh, maybe there is. Maybe I'm shortchanging myself there. There is an opportunity here. So I had that on my other analysis chart earlier. So we've already got what we need basically in many respects. The only thing that now to complete this picture is to get back underneath here, but not only here. I'd love to get underneath the daily pivot, similar to the 4-hour chart, and then retest, and then we could go short. So yeah, I like the area. If we don't get that opportunity, in other words, if we don't come below the daily pivot, but let's say this bar stopped here and was, yeah, that's the problem. It's going to have to get down to here, down to this low maybe, and then shoot back and retest here before I'd get interested. Otherwise, the candles are just too small to trade. So that's going to give us, let's say we get in there at 66.18. 66.18 becomes, yeah, look, there's enough room to take 6 or 7 pips of profit. And on, you know, maybe a 10 pip risk, that's perfectly fine. Don't have a problem with that at all. And then, of course, we've got targets down here at around about the 39.40 pip level. And off maybe a 10 pip candle, that'll do, won't it, for the day? That'd do me. If that were to pan out, happy days. I've also got an opinion on the Aussie on the smaller, on the miners as well. That's posted in Ash and I's 2-minute brief, which is, I can't remember how we get access to that again.
Oh yeah, I'll post that in now. Yeah, I'm just about to post in it myself.
All right, mate. Happy days. And Dollar CAD's another one I'm interested in. Again, I'd love to see, and I love to play false breaks of resistance, right? So if this got up to here and then back underneath it, retested it in particular around these pivots or underneath the pivots, then back and retest, I think that would be quite the bee's knees. can I consider trading that prior to that? Well, yes, I could. And the reason I could is we've got a big rejection bar of that level. We've had a massive bearish engulfing bar, then a retest of the pivot. So we've smashed through the daily pivot, the weekly pivot, and the monthly pivot. Big retest of both of those, or all of those, sorry. Would not surprise me in the least if this just shot through anytime now. Looking at it from how do we get into it? Same, up here. So, pardon me, consolidate, back underneath, get underneath the pivots would be really cool. Then come back and retest and put an entry about here somewhere. Again, if we got an entry before the pivots, makes life very, very difficult and high risk. So I'd much prefer to get back underneath here. Even take these lows out would be good. And then come back and retest. There's your entry there for US dollar CAD short. Swissy. Yeah, look, this has disappointed me because I was in the short from up here, and then I got out of it around about this level. You may well ask me why. Great question, guys. Didn't want to trade through the weekend was the answer, and I've missed out on the major part of this move. So I'm a little bit disconcerted with it, and really looking for a big pullback. Whether that's my pocket talking or whether it's technicals, it's a combination of the two, I've got to say. But you know, to trade this for me, it's either got to consolidate for maybe 3 or 4 days in this area, or it's got to pull back. They're the only two considerations that I would have in trading it. So really not worth digging into that at this point. Although if you go down to the 30-minute chart, you can see the consolidation is well underway on that time frame. The problem I've got with that is it's not uniform. You've got higher high, higher low, lower high, higher low, higher high, lower low. You know, it's all over the place like a mad woman's breakfast. And really, I can't get a handle on it. The only real scenario I can paint for you is this one. So we'll pick a couple of equal highs. Let's pick those two. We'll pick a couple of equal lows. Yeah, good luck with that. There's one there, the kind of match over here. So I've made a range, basically, is what I've done. And again, going back to what I was talking about on the euro earlier, if I get down to here, I'll look to trade it to the top. If I get up to here, I'll look to trade it to the bottom. Not just because it gets to the top. I would need to have a candle pattern that suits me before I did that. But that is exactly what I'll be looking at if and when it happens. Finally, the Kiwi. Kiwi's coming off the lows, somewhat of a double bottom situation there. Big rejection already of the monthly pivot that you can see here. Look, I would have traded that, to be absolutely frank, except for one thing. The retracement's way too fast. And when that happens, there's every indication that that is not over and done with yet. If it happens in, you know, days and probably even a week or a bit more than a week and ambles up to the level, then hits it, more than happy then to take the short. But if it's very fast, it really does put doubt into my mind as to whether that rally is over. So despite the fact that it's got a very big, strong rejection bar here off the monthly pivot, and I think we're probably seeing that now, the market wants to have another look at that level. And it wouldn't surprise me at all if it goes to a maybe a Fibo retracement, maybe there again, maybe here again. You know, there's a few little levels here that are significant. If it came back to here, it looks like a 50% Fibo retracement. That probably would be what I'd be looking at before I look to short this. So just let it run, let it go. I don't want to trade it long. I don't want to trade it short. So I think there's plenty of opportunities in the others, and I will leave it at that. Before we go, just a quick look at the pound. Has that triggered? Answer no. We are still in the gap, mate, between monthly and weekly pivot.
Yeah, looks like we've got 5 minutes to watch this FTSE as well, and that might also end up just sticking itself in the gap too. So we'll see what happens with that. But
interesting question there, Chris. The Bank of England refused to cut the rate. I've heard a rumor that the new Bank of England governor has stated that it may not be necessary to cut rates, but I haven't heard that they're definitely not going to cut rates. Ash, can you fill me in that?
I also haven't heard that either. But I wouldn't. Yeah, I mean, Mark Carney's. He's kind of finishing his tenure. Would it be in his interest to want to do that? Maybe not. Maybe that's the thing with Mark Carney. Maybe he just doesn't want to put himself in a position where he's doing that, just before he leaves.
Yeah, don't know. I certainly haven't heard that.
Yeah, I haven't either, but I will look into that. Whether it's an interesting one. The Bank of England, obviously, is going to be much more important for the pound than it is for the FTSE. But what will be interesting is to see whether the pound can strengthen. If that's the case, then why wouldn't the pound strengthen against the dollar in the coming weeks? And I have to say, I'm quite bullish on the pound. It's going to be a difficult. It's going to be a difficult environment now to be going and putting your money into. But I'm quite bullish on the pound in the long term. But I don't know whether this.
If it gets through here, as I said, if it gets through here and can get above the monthly pivot, close and come back, I agree with you. Until that happens, I'm probably on the sidelines.
Yeah.
And thinking, okay, maybe this has got a little bit to go.
Yeah, you could be right, mate. You could be right. Yeah, but I'm sorry. I'm just trying to just put my trades and all that stuff in here. There we go.
Are you okay? You want me to?
Let me just see if I can.
Of course, I'll just have a little chat whilst you're doing that. We are on NFP Eve, of course, by the way. We do have that number coming out tomorrow. I would suggest that it's hard to use the word insignificant, but that's the word I want to use. I don't think, unless it's a big miss or a big beat, that you're going to see too much out of NFP tomorrow, because of what else is going on around the place. So yeah, we'll see, but I just don't think that it's going to have the grunt and the punch that that maybe it has at different times. And we said it from the outset. All these things are about timing, and if there is an interest rate cut, as we've had during the week, and it doesn't perform as we expect, and guess what? Something else is going on. That can be a pointer as well. If the market doesn't react as you anticipate, then ask yourself the question, why? Why is that the case? And generally, there is a good reason for it, and the market will tend to react in the opposite to what you expect, or what you traditionally would expect to happen.
Sorry, I'm having a few issues here. I might have to get on the phone to my broker.
All right, mate. Then we might answer that question next Monday about the margin. Or did you cover that while I was doing something else?
Oh no, I didn't. I haven't covered that. So I'm a bit concerned here. I've got a trade in the market with actual shares that I'd quite like to close. I just, it's not a too bad level, and I just don't know how I'm going to. I'm trying to do it online, but I can't seem to do that. Deal now. Can I do that? Maybe I can. Maybe I can close it here. Maybe I can do that. Sell. There we go. It should be right. Oh gosh. Oh yeah. Goodness me.
There's a little hint that there's a long on offer here on the pound, but I ain't trading into an untested monthly pivot. I'm sorry, that's not going to happen. Aussie's showing signs that this short may be on, but gee whiz, they're only very small signs. That's the problem we've got here. Very small candles. So liquidity on the Aussie and volume on the Aussie looks to be very, very poor at present. CAD needs to get up there. Hasn't. I don't know if we can trade it up there. No, not interested. And dollar Swissy still got to get to the bottom or top of the range. And Kiwi, I don't want to know about.
Sorry, mate. I'm going to leave things as they are with that. It's maybe not such an issue. Right. So what we got? So 9 o'clock. I've just placed in the 2-minute brief. Let me quickly post that in here as well, just so we have it. I posted it in with you, didn't I? So let me see if I can find it again.
Chris, great question, mate. And unfortunately, the only way to find out the answer to that is to subscribe to them. Now, I subscribe to 1, 2, and I do monitor a couple of others, a couple of free ones. And that's the answer to the question. You have to monitor them. And if they work for you, then they work. If they don't, they don't. I subscribe to both Julian and Justin's in Actions to Wealth because they're quality signals, and I know they're quality signals. I don't always take their trades.
I suspect Chris might not be talking about Actions to Wealth. There are lots of trade signals channels out there, free and paid platforms. Do they really work? I wonder whether that's a general.
Oh, is that a general? And again, the answer for me is exactly the same. You just follow them, and if they work, they work. If they don't, they don't.
It's really difficult. I have to say, Chris, it's really difficult because there is so much when it comes down to understanding about trading, and there's so many people out there doing it and selling stuff and telling you that this thing, and you know what? A lot of those people don't necessarily know. And the guy that taught me used to say this to me, that some of those people out there are offering stuff which just doesn't work and is useless. It's rubbish, and it's either that they don't realize it's rubbish, and I'll get to why in a second, or they don't want you to know that it's rubbish, so they're selling it anyway. But I suspect most people probably aren't the sharks that I don't know, maybe I'm wrong on this, but I don't think there's as many sharks out there in the trading community as people think. I just think that people just don't understand what they're doing, but they think they do. I actually think they've lied to themselves rather than to other people, because it really is a far-reaching industry, and there is a lot to learn and a lot to know. But you've got to get on board with the right people, because if you don't, then you could end up, being with people that just don't get it. They just don't really understand the stock market, and they'll say, and people have different opinions. People trade in a different way, and this is the other thing. Jeff is technical with some fundamentals rolled in, and I think over the years the fundamentals have probably crept in more and more as we kind of all get together as a team. I'm fundamental into technical, and I used to be the other way around. I used to be probably pure technical actually when I started. I didn't get the fundamental thing at all. But now I'm the flip. I'm fundamental with a technical overlay on top, because that's what I understand and that's what works for me. Free and play. I mean, I've seen some free people, and I know that there's another guy that I've been watching on YouTube. He's a trader on YouTube, and he's free, and I think he's a genuine guy. I really do, but there's stuff that he says that I recognize he just doesn't really understand what he's talking about. And considering the authority he says it in, he probably shouldn't be doing what he's doing. So but I don't think he knows. I don't think he realizes. I genuinely don't think he realizes. I think, and the reason that I say that is that I think people are out there trading, and actually, firstly, you can get lucky, and you can get lucky for a long time. Secondly, if you've got good money management, that really does mask a lot of a lack of knowledge. And maybe it doesn't, maybe mask is the wrong word. Maybe it's enough. Maybe what you need is enough good money management to survive, even if you don't know what's necessary to know in the long term. But that does involve really, really strict discipline. So if you're very, very disciplined as a person, then you actually, some of the things that you're talking about, the free stuff, the paid stuff, actually can be a little bit worse for you. But the issue is that people aren't disciplined. And this is what I mean about understanding the whole picture and the process, because you need to understand, you need to know how to get your discipline in shape, how to check yourself. You know, the trading is so holistic. It's not just about a signal and an opinion that you can get from these free channels. But that's what we believe it to be. You know, we believe it that if we buy a signal or we buy a program where somebody's come up with this really great system, that we're going to be traders and we're going to be making money. But it just doesn't work like that. And the reason is that it's got more to do with, or it's got as much to do with psychology, if not more. I don't know, what would you say, Jeff? Like percentage wise, what part of it is psychological?
Oh, to start with, massive, because unless your head's in the right place, you're not going to be able to manage your money properly. You're not going to take the right entries. You're not going to take the right exits either. So,
yeah,
you know, it's massive. Percentage 70%,
yeah,
in the first instance, and then it flips around to your money management after that being that important. You know, you can't overemphasize that. Money management is absolutely the bomb in this industry. Got to get that right.
Yeah, you do. Yeah, you do. Yes, yeah, you do. So really, when you're talking about the signals and stuff, actually they become secondary, don't they?
They do,
if not
but
tertiary, if that's the right phrase.
The reason I subscribe to a couple of those channels is because I'm not in front of the charts much at all. You know, this hour or hour and a bit is pretty much all I can afford at the moment from my own schedule, and I do half an hour in the morning, so that's it. But I figure if guys are making money and I can make money with them, then why wouldn't I do that? If they send me a signal, bang, I can put the order on the phone. That's the easy way out. And as Ash has just said, I don't take all their trades, and some of the trades I take, they manage overnight when I'm asleep, and I wake up and I've lost money, and they've made money. That's the danger that you've got, because a professional trader will manage a position as he sees fit, and if that's why you're asleep, then, as I said, you know, they're making money and you're losing it. That's the danger of signals.
Yeah.
And trust me, I know, because that's happened to me so many times. It's not funny.
Yeah. So that's So I mean, I hope that answers the question, mate. I think I don't know where you're at. I don't know whether you're part of the Actions to Wealth community. You know, or whether you've managed to find us here and you're sort of like learning this way, which is great. I mean, we're certainly not claiming that you are going to learn everything you need to know here. This is a free show, and we give what we can, but this is
Ash
really
and I having a chat, basically, because we like to do that. It improves our trading, you know.
Yes.
So the byproduct of if the byproduct of that is that you guys get to catch a bit of what's coming out of our combined experience, then happy days. That's why we're doing it at the end of the day.
Yeah, exactly.
And I think you can cancel the dollar yen order, guys, by the way. That's now got too much work to do to make us money, so we'll just cancel that one. Not saying I'm still not keen to get there, because if this becomes a high or low based on this little tweezer bottom or double bottom, still valid. But at this point in time, I don't want to be part of that. So
Yeah,
Bye-bye.
interesting day so far, mate. That the FTSE 100 is well and truly on its way to the downside, already down around about 100 pips from where we were talking earlier on. So down a whole 1.5% this morning. Looks like the S&P is drifting in the same direction as is the Dow Jones Industrials and the Nasdaq. So it doesn't appear that at this particular stage that the market is particularly happy. But my concern with the downside, I have to say, some of my concern with the downside is the timing of it, because we're so early in the month. But if this collapses early in the month, I'm not sure what it really is going to say about where we may be by the summer, mate. I've got to, when you think about May, sell in May, walk away. Well, nobody will have anything to sell.
There'll be nothing
left. Yeah. Anyway, it's going in the right direction as far as I'm concerned. The FTSE 100, which is great. I've been waiting on this for a while, so we'll see if I've just posted in the broadcast group, so hopefully you guys can get on board as well. I suspect that it's going to be worth taking opportunities. Now, there's still a potential bounce point around about 50 pips down from where we are now, could bounce back up again. So there might well be an opportunity, and that could lead you to maybe around about 67.30 or something. You might have to get in a bit lower than I've suggested, but this could be a market which is moving, and it could move a long way. I don't know. As I say, I'm a little bit concerned with how early in the month this is moving, and maybe it doesn't provide the monthly collapse. Maybe it just holds on for a little while.
We need to show your chart while you're talking, I suppose. There you go. And I think the pound's got potential to explode from there as well, but I'm not going to trade it because of that monthly pivot. It's too dangerous.
Pound's an interesting one too, isn't it? Because you give me the screen, mate.
Yep.
The pound is an interesting one too, because if what we just heard from the Bank of England is so, then the dollar will weaken across the board, and
the pound should benefit.
And the pound should be a beneficiary, absolutely. So I'll be looking for the FTSE to come back into the trend line, and then potentially bounce back up again. I don't know whether it's going to bounce back into this weekly pivot or just to this low. I'm going to give you it on a chart that you guys are looking at price wise. So you'll be looking at this instead. I was on the futures. Actually, it's a lot cleaner on this one. So it does suggest that we're going to come down to around about 66.75 and then bounce back up again. The daily pivot on this is a lot lower. So 67.73 by the looks of things. There's a potential opportunity to take the short in. And that wouldn't be bad coinciding with that price as well. But it's on its way at this stage. Now, I don't know right now what's driving it, because I haven't had my ear to the news. And we have to be a little bit careful to get too overexcited that we're going to collapse here, because all we may have going on is a retest of this area here. And if we look at the 4 hour, it might just be that we're retesting, this point one more time, and then we try and fly back up to the upside. That's more than possible. But I will say, at this particular stage, the signals are sell signals and not buy signals. So either if it turned here, I wouldn't be interested in the long. I'm looking for shorts, and anything that does turn here, I'm looking as a sell the rip kind of scenario. So I'm looking for the shorts and maybe even to add to what we've got. Right. I guess that's us. Yeah, it's got to be us, mate. We've gone.
Yeah, the overtime check is going to be substantial again today, but I suspect I'll have to give it back given the interruptions that I've had earlier in the week. So let's call it quits, shall we?
Let's call it quits. Yes, we certainly will. Oh, Chris, Q, the letter Q, and the letter E, not Kiwi. QE2, a quantitative easing it stands for. So there was a batch of quantitative easing, which is effectively the central bank pumping liquidity by making money, printing money. That's QE, when they print money and they pump it into the market. And it wasn't until they printed more money that the market started to stabilize last time. So yeah, look it up, mate. Look it up. And this is great for you. As I say, I don't know what your situation is, whether you are part of the Actions to Wealth community or whether you've just found us on YouTube, you've stumbled across us and you're listening in. Either way, you're more than welcome, and you're it's great that you're here, and we love you being here. But we'll give you these little bits of and pieces of information. If you are growing your knowledge, go and check that out. Go and check out QE. Quantitative easing, and you will understand what happened last time. And it's important to know that, because if that's where we are now, you need to know what tools they are likely to use to buoy this market up. And if they use those tools, will it? Because if it does, obviously we're looking for a buy. If it doesn't, then we're waiting for the next announcement. But I have to say, it usually takes a few goes at this before they get it right, and I don't think this is going to be the.
And bear in mind that the Fed have been doing this for months now. They've been saying they haven't, but they have. Lewis, cheers, mate. Have a good weekend for you too.
Yeah, have a good weekend, buddy. Is there a chance of a Bank of England rate cut? Yes, of course. There absolutely is a chance of a Bank of England rate cut. But let me just tell you one thing. A strong chance, yeah. But let me tell you one thing. The numbers at this stage from the UK do not support a Bank of England rate cut. So the reason they'll be cutting rates is because they are bricking themselves. I can't swear. Actually, I probably could swear, but I'm not going to swear. I'll leave that to you, Jeff. But they are bricking themselves that the economy is going to collapse across the board. Central bankers are bricking themselves, and the Fed have moved. The Bank of Canada have moved. Yeah, COVID-19, exactly. They're bricking themselves because of it. So yes, there's a chance they cut it, but the numbers do not support it. So will they cut? That's another question. Strong possibility, as Jess says, very high possibility, but they shouldn't. They shouldn't. In my opinion, they should. In fact, forget my opinion. The numbers say they shouldn't.
Well, the numbers do, and so does your opinion, so does my opinion, because I don't think it's going to make the slightest bit of difference.
Yes, they're all cutting because of COVID-19, mate. Yes.
It's called the panic button, mate.
It's the panic button, yeah, which is fascinating. And this is what Jeff was saying earlier. They're cutting rates to fix a financial problem, which is actually a medical problem.
Yeah. It will be.
Not going to work.
It could become a financial problem for a lot of industry and therefore a lot of economies. But it's not there right now.
No.
In my opinion, anyway. And
so we've just had no, and we've just had Flybe, the airline group, who go into administration. Now, do you think that a Bank of England rate cut would have saved them? Not a chance.
Not a hope. No.
What would have helped them is a huge bailout package. Some sort of tax break or a loan, 0% loan or something. Yes, the Fed is expecting that, mate. Yes. That's where we are.
You'll be probably looking at government's fiscal intervention if this continues much longer, and they'll use tools like tax cuts and all sorts of things like that. They may even, like Australia did back in 2008-9, pumped a lot of cash back into people's pockets.
That's the way, yeah. That'd be the way I suspect would be better, because even if people aren't going out to the shops and consuming, they'll probably still buy online at least.
Yeah. Whole interesting time ahead. There's no question about that.
Yeah, absolutely. Yeah, but as it comes down to it, your guess is as good as mine, StarMax. I don't know what will fix it. I haven't got a clue. But I can say with some comfortable opinion that I don't believe it's going to be this. But can't say whether the Bank of England will cut rates for sure. I suspect they probably will. But I think it would be foolish, and maybe they, for that reason, because they realise it would be the wrong tool for this particular problem, they won't do it. I don't know.
And their toolkit's getting very empty.
That's the other issue, isn't it? Gosh, do you know what, Jeff? We could go on all day today.
We could, but we better not.
Yeah.
It's the weekend.
Yeah, it's the weekend. Okay, all right. Well, we're gonna bid you guys bon bouche and clear off. I don't even know if that's a word. If anybody wants to look it up for me and find out, that'd be
I've been
great.
meaning to do that, but I just haven't got around to it.
It's Del Boy used to say it. That's why I like it.
Aha,
You don't
there
know
you go.
Del Boy? Do you know Del Boy?
No, I've heard I have heard that word.
Okay.
Is he Hellboy's brother?
No. He's there was a comedy show called Only Fools and Horses by about these two guys, and one of them is a market trader, and he's a Londoner, so he's really kind of this wide boy market trader, and he's always looking for the next deal. But they everything that happens by the end of the episode, they've always messed it up somehow. And yeah, that he used to try and speak French to all his girlfriends, and he never quite got it right. It was very funny.
Got it. Yeah, okay.
Do you know, mate? I genuinely think you would love it if you can go and find it. It was a brilliant comedy show. It ran for probably the longest time of any soap opera in this country. It's very funny.
Okay, I'll see what I can do, mate. I haven't really had a good look at your chart for some reason. That 4-hour chart looks very much like a flag at maybe a 38.2 retracement level. Even.
Oh, mate, I'm bang with you. Yeah, do you know, I've been looking at this for some time. Yeah, that's what Jeff's talking about, a flag pattern there. And that would suggest, I don't know whether that leads us also into the same area that we were looking at earlier, but that's going to suggest coming to, let's see if it does. Yeah, pretty much.
I quite like it.
Yeah, nice flag pattern. So looking bearish. Right. Anyway, let's get going, mate. We're going to be here all year. Goodbye, guys. Have a great weekend. And we will be back. The title of this show is Learn to Trade Live and Free. We can probably make it. Oh, the title of the show, the comedy show, Only Fools and Horses. Only Fools and Horses. Look it up. Del Boy and Rodney. Very funny.
Get out of here and have a great weekend, everyone. See you later. Got to go.
See you later. See you, buddy. Have a good one.
Cheers, mate. Bye-bye for now.